shaping up. That's the management of Reddington saying that there has been strong growth in India as well as for the UAE business, and they will maintain a gross margin at 4% plus levels. All right, to the big market voices as promised, that continues on the channel, and a glimpse of our Diwali special programming where we had a very special chat with Motilal Oswal Group's Raamdeo Agrawal talking about the Samvat gone by and more importantly what he foresees for the markets down the line. Let's listen in.
See, the quick commerce is it's a revolution. India is the place where delivery should happen. There's a highest competitive edge. The lowest cost of delivery is possible only in India because this two-wheeler, the guys are affordable. Then you can. So I think, and it's a very dense population in cities, and we have a lot of population. So I think for 50-60 bucks you can have a profitable delivery, which is less than $1. Nowhere in the world it is possible to deliver in 10 minutes for 60 bucks. So, now, and if you and me have to go and pick up stuff, I think it's a lot of pain in the sense that you have to park your car, you have to go to, for three things, for say a bakery and then the grocery and then pharmacy, or you have to go to as many shops. Here in one click you get everything, and that too in 10 minutes. Before you can even go to the car. So I think, and price is also competitive. So my sense is this is a changing the consumption pattern in every household, not only top ends, across. Everybody is looking for convenience. So I think that's where I think there's a big revolution, and it's a $1 trillion kind of an opportunity. In that even there is a 10% transition. We are in next 7-8 years. I think you're looking at $50 to $100 billion kind of FMCG plus whatever they are going to deliver. It's an evolving category. It's a revolutionary kind of a thought process. Now they are not making money, which I don't like. They should be making money. Now Zomato has shown some profit making, but I think Swiggy and Zepto is an early stage. So I think we have to see all these warriors when they make money, but very promising field for money making. Today we are at $4 trillion. And growing at the same pace of 7%.
We are still a young country.
And young country. So in next 25-30 years, when you have full demographic dividend, and we are growing at about 9% So every 7 years, 8 years we double. So in 32 years you get 4 doublers. So 2, 4, 8, 16. So 16x to the current. So you have a potential to go to 65 trillion from 4 trillion.
Wow. So that's the power of compounding and the maths when it is at play. So I'll move forward now. We've discussed the Samvat year gone by, now the current Samvat. First question which everybody wants to perhaps understand from you, if the starting point is today, considering the last 3 years have been great, you enumerated the returns. For next 3 to 5 years, I'm not using 1 year, what should be the return expectation from equities?
Always have a fixed rate, 15%. It's a wonderful rate to have. This is a 15% country, I'm telling you. 40 years, 30 years, 25 years, you do it, it's all anywhere between 14 to 15%. Even 5 years, post-COVID, 5 years pre-COVID, just about 90 to 24. It is 111% for last 5 years. So it works out about 16%. So the moment you do 5 years, you are set. You will be about 14 to 16%. So if you think market is high, you might make 14%. If you think market is low, see market goes down by another 10-15%. You are set for 16% kind of return.
But next 3 to 5 years, the CAGR to your mind, now whether it is 11 or 15, that's the base effect and that's the market cycle impact. But the probability of getting double-digit returns on a CAGR basis the next 3 to 5 years from equities is reasonably high.
Now now you ask about probability. Next year, 15% return, probability, I have no idea. It can be 0, it can be it can be anywhere. It's a toss of coin, 50-50, okay? You go to, say, 5 years, double-digit return, 10% plus, I would say 90% chance, okay? If you go to 10 years, 14-15% return, probability is like 98-99%.
Okay, great. Second, I'll move to what defines return, ultimately is growth and earnings. We've discussed India's GDP growth, you've given us the numbers. Let's understand earnings. For the second quarter on the trot now, earnings are down. The slowdown is visible. You can smell it and you can feel it. Do you think this is a temporary blip in earnings? Will earnings revive? And if they will revive, what will drive the earnings?
Yeah, so I mean, people who are know of things, I'm not a macro guy, so I keep hearing the chief economic advisor or RBI or our FM, whatever they say, we have to, because they're talking from data and their understanding of things, and they are going to make things happen. So RBI just said that they still stick to 7% kind of growth projection. They are the guys who are doing the numbers. They are the economists on the ground and everything. So they are saying that first half was impacted by weather and all sorts of things, and also election. So that slowed down the government expenditure big time. Okay, so I think second half will be best of government expenditure and private capex, whatever it has to pick up, and consumption. So all cylinders should fire in second half. So I would say Q3 and Q4 should be better than first half of the earnings. That's what is being touted by regulators or people who know of things. So clearly second half should be better, and then it should pick up. So a lot of things are going to happen in the sense that policy decisions will happen. Why should we think that nothing will move? Rate cycle is all over the world, it is coming down. Okay, RBI is saying that they will not make a hasty move right now, but direction is very clear. Maybe if not in this 2 months, then after 4 months, 5 months, it will happen. Your inflationary pressure which is there right now is also going to subside as the fruits and vegetables come post is Diwali and all. So I would think that the earnings outlook, I think this is the worst. If it is 6-7%, maybe it will be 10-12% for the second half, and then from there we'll take it as a lower rate cycle, lower crude prices. I mean, US election will be behind. Trump will be there to stop both the wars. So world will be a far more peaceful place. So let's take it as we go forward.
Two sectors which have been in limelight for right reason and wrong reason: PSUs and banks. Nobody expected PSUs to go high, and everybody expected banks to recover. Where are PSU stocks headed, and will banks make a comeback?
See, banks has two aspects. One is the PSU banks and other is the private sector bank. So PSU banks have done exceedingly well. Actually, almost 2-3x of index they have done. I think they have returned about 25-30% against 10% of the index. So they have done very well. It is the private sector bank which were flying for last 10-15 years. They had their some kind of balancing between public sector and private sector. So whosoever wanted to buy public sector, they sold private sector and bought into private. So I think correction in private sector in terms of valuation and all sorts of earnings, all management transitions are happening in Kotak, HDFC, everything is now over. It's the second inning for the private sector banks.
If you like this video, then like, share and subscribe to ET Now.